Well, before we got underway this morning in the grain trade, we had some word from USDA that we did, in fact, have an overnight sale announced one more time. This time around, it was a sale of soybeans. It was a sale that was made to China, and the amount this time around happened to be 120,000 tons. Just wanted to add that to the ledger. That'll be showing up probably in about a week or so out from now. So you can add that into the mix. All right, let's take a look at our grain trade. How are we doing as we get into the mid-session here? Right now on the grain, on the corn, we have the May contract a 1/4 cent higher at 387.5. Very quiet trade today. July is unchanged and December is unchanged at 406. In the soybean trade, we had a little weakness overnight. Right now, it's firming up off of those lows. We have May now 1 3/4 lower at 1075 3/4. Had been as low as 1070 1/4 this morning. In September, we're now 1.5 pennies higher at 1061 even. On the chart here, if we look at November soybeans here, as far as what the chart pattern is looking like, we have been talking about this for quite some time, about the big increase that we have seen, and then we saw a little profit taking overnight. Well, right now it's showing 1035 3/4. That would be down 2 1/4 cents on that November contract at last check. Meanwhile, on the wheat trade right now, as we look at Chicago's Chicago's May contract, we're now down 7 at 502 1/4. A big drop there, but it's 7 cents off our earlier low too. July down 6 3/4. Kansas City wheat on the May contract, it's also lower today early on. We're down 7 3/4 at 537 3/4. Todd Bubba Horwitz is with BubbaTrading.com. He's located in Chicago and he rejoins us right now. Hey, Todd, good morning to you. What do you see on the trading floor this morning?
Good morning, Marlon. Well, I think what you're really seeing is you're seeing the grains are a little bit overextended. I think they're going higher, but I think they're going to go lower first. I think, as a short-term trader, you're probably going to see a couple of percentage points knocked down to the downside. I think that corn would probably go down into the 370s. I think that you'll see soybeans probably come back down into the 1030s, and I think that you'll see probably wheat come back to about 490 or something like that. I think you're going to see some selling pressure, which would actually be very healthy. I know it's always hard for me to say it's healthy when you get some selling, but it would make the next rally that much more powerful when it comes back.
All right, farmer selling has been fairly active, hasn't it, in corn and soybeans here the last week or two?
Yeah, I mean, you're getting prices. So now, as what we usually see is now we're rushing to get out because we've gotten some price move. But I think one of the things that you have to really realize here is you're better off hedging your position here instead of selling here, because I think you're going to be surprised at how much higher we're going to go. And I think that will tie into the equity markets that I think are going to start to sell off a little bit. And I think this whole thesis is that we're going to see much higher prices. So I wouldn't be in a hurry to sell here. I'd rather hedge here, protect these prices, and let the markets run, because I think there's a lot of room on the upside.
How are the option premiums holding up these days? Are they getting kind of on the expensive side on the grain or not?
No, not really. Typically, Marlon, when markets rally, premium goes away. When you see a little bit more complacency in the market, and right now we're seeing pretty much a lot of complacency in the grains because all they've done now for the last few weeks is go up. So what happens is premiums shrink because when the bulls are in charge, they shrink the premiums down because they're selling puts and they're just saying, hey, we're not going down again. So that's usually what happens, and when the premiums start to expand is when you can look for some downward momentum.
On the Minneapolis wheat, we can take a look at that spring wheat market with Chicago and Kansas City going lower. We have Minneapolis wheat going the other way now. We have May 3.5 higher, 627 3/4 is our last trade. And July now 4.5 higher at 636.5. That's now 14 cents off our earlier low this morning. That's very interesting. Only a penny from our high of the day. And in the cotton trade, let's switch over there where we have the May contract now down 51 points at 84.72. Had a high of 86.60 early this morning. December now 2 lower at 77.93. And that's also, now 78 cents. So it's about half a cent off its earlier high. We're talking with Todd Bubba Horwitz of Bubba Trading in Chicago, and we'll be back talking livestock in just a moment. Well, our guest is Todd Bubba Horwitz of BubbaTrading.com in Chicago. He rejoins us to take a look at our livestock trade. Yesterday, Todd, we had the cattle market and the hog market opening up about as flat as could be, and then they firmed up, and wouldn't you know, by the time we got to the end of the day, we were $1 higher. This morning, we opened up the cattle market about as flat as could be, and then it firmed up again later on. This seems to be kind of a trend we're establishing this week.
You know, if you're watching RFD TV every week, you know that 122 is my target, and we're seeing a nice move off of 122. I think we go higher. Again, I'm very confident that these markets are now, they've put the new bottoms in. I think we now start to work our way higher. It doesn't mean there won't be some pullbacks in between, but I'm looking for them to take out the old highs. So I think we start to see some momentum higher in fats and in feeders. Feeders came down to 144, a little bit below, and then have rallied past that. And again, I'm looking for very strong pricing. I think the entire complex, I mean, grains and livestock, look really strong going into the second and third quarter this year.
The steer carcass weight last week was down like 7 pounds, wasn't it?
You know, I don't actually check that, so I can't give you an honest answer. I can say that basically what I watch is I watch the money, and I watch the way the money flows in, so I don't have a real answer for you there.
Are you concerned about, well, you talked earlier about potential for the grain markets to maybe have a rally into the growing season? That could be detrimental here on the livestock side, couldn't it?
It could be, but again, you know, prices start to go together. You know, we've got a lot of things that combine, and basically when markets are slow and things are bad, we're always looking for every reason to figure out why it won't go in a certain direction. Now that things are starting to perk up a little bit, the price of corn won't have as much of an effect on feeder cattle when we start rolling higher, because again, higher prices will cure themselves as they go up. So I think that just like if you look at the dollar, all these facts that we always focus on when markets are very quiet will go away when the markets get busy and we start to get higher prices, because the higher prices will take care of the cost of feed.
All right, let's get out the microscope and look at the prices right now in the live cattle trade and the feeder cattle market. We'll run through a few here. Let's go to the live cattle board, where we have April 63 higher at 123.85 per hundredweight. June 45 higher now at 115.80. August up only 6 at 113.18 per hundredweight. On the feeders, let's switch over there, where we have the March now a nickel higher. April 12 higher at 147 even per hundredweight. The May contract 14 higher at 147.82. And then if you look at the lean hog trade this morning, right now on the lean hogs on the big board in Chicago, we currently have the April down 12 cents at 68.68, and now the May contract down 63. We're at 75.12, about $1 off our earlier high. Todd, that's a new low for the day. Does that concern you here this morning?
No, I think hogs are just a straight out buy. You know, again, there might be a little bit of pain and anguish that we have to suffer through, but I think you just buy them, and I think they're going significantly higher. I would expect to see April at least go back to 77. So I'm looking for higher prices pretty much across the board, Marlon. I don't think there's a lot of concern. And of course, you've got some pressure every once in a while, and you've got some people still trying to keep them short. Some of the commercials are still involved, but I think they'll get punished as what will usually happen. And I think we start to see higher prices. We start to see pretty good support, and we look for our move higher.
So you don't see another downward leg yet in the lean hogs? Do you think they maybe bottom temporarily at least?
Well, I thought they bottomed at 70, but my backup target was 68. So 68 is where we are. I'm very comfortable being long here. I'm not concerned. I look for, again, I look for a considerably good rally coming forward, and a lot will tie in with the other outside markets that will bring some new money in here as well.
Very good. Thank you, Todd. I appreciate it very much.
Thank you, Marlon.
Todd,
have a great day.
Horwitz. He's with BubbaTrading.com, and he's located in Chicago. There you go.
Always a lively discussion with Todd Bubba Horwitz.
Always.
Thank you so much, Markets Editor Marlon Bowling.